Good morning. Let me start you off with a fun fact to chew on. $2 trillion. That's how much money is lent by businesses to other businesses at any given time. That's not bank lending to businesses. That's businesses lending to each other. And that's kind of a scary thought. That's not our core competency, but we have to do that every single day. And it's a magnitude that's surprising when you think about it. Now, this happens through an invoicing system. I'm sure you're all familiar with payment terms. As a business, you'll order something and you'll promise to pay in, say, 30 days. Well, that's net 30-day terms. This would be a great system if all businesses paid on time, but they don't. And so what happens is you have cash flow pressures on companies. 500,000 businesses and more every year go out of business in the United States. And a lot of that is because of the cash flow pressures that they're under. And the ripple effect that that has on other businesses is significant. So with $2 trillion at risk, you would think that businesses have robust tools to be able to manage the risk of getting paid by their customers. And they don't. And it's kind of ridiculous. I'm Jim Swift. I'm the CEO of Cortera. With me is Alex. Our mission is to finally bring the power of the internet to the world of business credit. Now, in a lot of cases, we can look back at history and we get clues on how to do things differently with different applications of technology. And this is one of those cases. Over 100 years ago, people within companies would get together and they would talk about their common customers. Is this guy paying you? How's he going to pay me? And that really had two important components to it. One was the data, exactly how this company was paying, and the other was the narrative around it. What's going on in this business? You need both really to be able to assess your risk fully. So in 1972, Dun & Bradstreet came along and they introduced the first electronic credit reports for businesses online. And that was effective in bringing the data component online, but it didn't really address the social aspect of risk management. So what we're doing is we're taking a step back and we're reapplying technology with what's available today in order to be able to bring both the data component and the narrative that comes from the social interactions together in one source. So today we're pleased to launch Cortera Circles. It's an online implementation of a proven risk management capability that's been around for over 100 years. So let's pretend that I'm the credit manager within a small manufacturing company. My customers don't pay cash. They demand payment terms. They want to pay over time. And that's convenient for them, but it's very risky for me. So what we've done since 1972 is we've relied on mainframe era credit reports. Say I've got a customer, though, that comes to me, Spruce Semiconductors. I haven't seen them in a long time, but they just placed a big order with us. The sales guys are all pumped up. They just closed a big deal. But Spruce is asking for net 60-day payment terms. Well, they've never placed an order this big. How do I know they can pay? I've got to make sure that we're going to get paid as a business. So in the old days, it was the data online. We'd go and we'd look at reports that would give us some clues as to how they're paying. Now with Cortera, though, you have an alternative to the 800-pound gorilla in this space. For just $3, you can pull a report that gives you all of the critical information that you need instead of the $50 to $200 that you'd pay with the old guys in this industry. But as a credit manager, I look at these facts, and sometimes that's just not enough. I need to go beyond the data, and I need to pull in some narrative from the community about what's going on with this company. So at Cortera, you can see we have the ability for people to come in and enter in the real-time experiences of how they're getting paid by a business. Companies want to be able to do this to protect their own interests, to protect each other, share information that they have, and to be able to tap into the heads of people that are also interacting with their customers. So here you can see comments over here on the right that tell us that there's been a major reorganization over at Spruce Semiconductors. And there's a management change going on, all kinds of flux happening with this business. Now, this is useful for me. It goes beyond just the raw data that's in the typical report. And it also, though, whets my appetite, because now I want to know even more what's going on before I extend them credit. So what I can do now is ask my circle. I can reach out and I can join different groups. I can form my own groups. These can be within inside a company. They can be within an industry, within a geography. It doesn't really matter. But I can reach out when I need it and ask the people in my circles to assist me in making that credit decision. So here you can see that we just placed a request for help and the reviews start to come back in. I go back out and I can see the details of the reviews. So the first one that shows up, Dave G. I don't know who he is, but he's also dealing with Spruce, and he hasn't been paid. He's 90-plus days getting paid from them on his invoice. Another one from Susan Thomas. She says that for the first time, Spruce has started paying them more slowly. She can't even reach anyone in finance to understand what's going on over at Spruce to assess whether she has a problem. So what she does is she puts a hold on orders. So this is all really useful information for me. Now I'm able to go back and make a better decision about Spruce. Instead of just, in the old days, going with what I could find just in the data and saying, I'll give you those net 60 terms because we need the revenue, frankly, I can go back and say, well, maybe we're going to do this a different way. Maybe it's half up front and the rest net 15 or net 30. Or maybe I'm just going to reach out and talk to the CEO or the CFO of the business. But the bottom line is, by reaching out into the community and supplementing my old view with what they know, I'm able to protect my business better. When you go back to the data itself that's in these traditional reports, it's really been from less than 10,000 companies. And there are over 20 million businesses in the US. So until this point in time, most companies' experiences with other businesses have never been captured. So we're trying to change that by allowing the voice of the small businesses to be heard and shared with other small businesses and large businesses alike. So business is not just business. Business is personal. Risk management goes beyond traditional credit reports and scores. And it has to factor in the human element, the experiences that we all have with the businesses that we interact with. Yet we need to manage this in a way where we don't lose sight of the old world.